Joining us to talk about all this is financial expert Terry Savage. Good morning, Terry. I know futures are up this morning. The market opens in about 20 minutes. What does that all mean?
Yeah, it looks like we're going to open up about 400 points. So we'll recoup maybe half of yesterday's losses. At one point yesterday, the market was down 1,200 points. What I'd like to do is paint you a bigger picture of what's going on than even yesterday's challenge by the president to the Fed's independence. What you need to do is sort of step back and say, forget the politicians, forget the economists. What are the markets telling you? That's where money puts its mouth around the world. And here's what we see. We see gold prices overnight soared to over $3,500 an ounce, backed off a little, but gold is up 30%. In addition to stocks declining, we see the dollar declining about 10% against all other currencies. And we see our interest rates moving up in spite of the threat of an economic slowdown caused by the tariffs. And we see world oil prices going back down towards $60 a barrel. And what is the story of all that? That story is the rest of the world is taking a look at the United States. It's not the end of the United States, but taking a look and saying, on the margin, we don't trust you. We don't want to invest so much in you. And so the major impact for the stock market is it sets a negative tone. It sets a negative tone. They don't want to buy our debt. So that means our rates have to go up a bit to attract investment. And the whole idea of the dollar, look, this is not Econ 101. This is your retirement plan, your budget. With the dollar going lower, it means forget tariffs. Everything we import costs more. About 10% more. Then we have the 10% tariff and maybe some future tariff deals against these huge tariffs. That's what set the market on edge. The global hedge funds, the global investment funds are going, I don't know about the US economy now. So that's why you see stocks down, why you see interest rates up, and kind of a run to where else do we put our money? Gold and Bitcoin also up because there's a question about the United States in the near term.
So does this come down to a game of chicken between us and China and who can hold out the longest?
Well, China's actually a separate thing than the rest of the world with its investments. Yep, it absolutely does. And I'm not sure how this game of poker will end, because everybody else may be willing to make some kind of a deal, despite the fact there will be higher tariffs. There already are. But China, well, I don't know who holds the trump card here. Is it China, which can control its economy and tell its people, tough, you're going to live in tough times because our factories are going to be slower, we're not sending stuff to the U.S.? Or is it the president who holds the trump card saying, we don't care if we don't get imports from China or if they cost more? That is what the financial markets are gaming right now. And if you are an individual, number one, you have to realize the bias is now to the downside. We'll have rebounds, not the end of our stock market, but the bias in the stock market is to the downside. The bias in interest rates is to the upside. And the cost of things you're going to buy, whatever it is, and consumers have been rushing out to get ahead of the tariffs to buy everything from, towels and to automobiles. But eventually, the impact of these tariffs, whether it's on tomatoes or avocados, or on cars, or steel, or strategic minerals, all of that is still to play out in our economy. And so you want to be very careful about being in debt. You want to try and adjust your budget and adjust your expectations for the stock market as well, especially if you're close to retirement. It's not the end of America, but it is a major global change.
All right, Terry, thanks so much. If you want to ask Terry a question, go to terrysavage.com. Hey, Paul. Thanks, Terry.
Hey, we're watching the clouds increase across Chicago.